Welcome back to the most aggressive stock analysis. I'm the co-founder of the StockBossUp App, the largest battle royale for investors to showcase publicly their investing prowess, and along the way, help new and beginner investors get some good stock ideas. But I'm not here today because of that. I'm here today because I am sick and tired of being not at the top of my own app. So watch me climb the rankings and maybe on the way, get some good stock ideas. Now, if you like bloodthirsty and aggressive stock analysis, then maybe I can ask you kindly, like and subscribe. But if you dare think that you could beat me, well then, try it out and join the StockBossUp app. Either way, I hope your portfolio is doing great today, and I hope it's about to get a little bit wealthier. So let's take a look here at where we're at. Right now, we have Stock Analytics AI at the top, at the cusp of the 10%. There's a few people above them in the 10 percentile range. And then there's Ben Graham, who's just a great YouTuber. Really, really sharp ideas. Check him out. But he's at the cusp of the 25 percentile. And then just underneath that is the SP 100. That's the community index, which is taking all the ideas from the top rated stocks, and it's using that for its own index. And then below that is Mr. Market, the S&P 500. And below that is our good friend Wise Intelligent, who is going to start updating his portfolio and get up the rankings. So that's where everything's at in general. Now here's where I'm at right now. So there is an intern from Holt that is beating me right now, which is absolutely just infuriating with a 20% APR. Below that is me at a 26% APR. And then what's really great about this is that there's someone called Too Volatile in between us. So that's a great way for me to explain what Too Volatile means and why StockBossUp is such a tough competition. So if you are too volatile, if you got a little too lucky with one or two picks, and you should have a diversified portfolio of at least 10 picks, you'll get flagged as too volatile. And if you don't fix your portfolio, the system will fix it for you. So that's why there's a flag there right now. So as you can see, I'm at 26%, and I want to hit at least the 25 percentile, which would, be Ben Graham, who is in my path. And he's at a 70% APR. It's just incredible. These are such great investors that new and beginner investors should really, really check out. Really find them on StockBossUp and then go and find them, go find them and check out their stocks. So this is how tough the competition is right now. So you have at the top, I have a lot of good stock picks. These are the APRs, annual percentage returns for all these stock picks I have. So let me just go through them today. Typically in these analysis, I'll go through one stock in particular and then add it in. But I think for today, I'm just going to show you where I'm at, show you how ridiculous it is to try to get to the top of StockBossUp, and then we'll talk about how I do analysis, which will then segue into my whole series about value investing as a whole that you can go watch another video. So my first pick is Twilio. I use Twilio, good service. That's why it's in my ratings. The next one is Western Alliance Group. So this is in my portfolio, my actual portfolio, and it's here as well. So I bought Western Alliance when there was a whole scare in the small bank sector. And I was already watching Western Alliance coincidentally, and it went from being a little undervalued to extraordinarily undervalued. And maybe in another video, I'll show you how extreme it got. But it was an obvious choice because the scare had nothing to do with their business. I only had a small amount of time to know this because I only had hours to figure this all out. And luckily I'd already done my research. So I waited, it hit $10 or so. I tried to buy there. There was a circuit breaker hit trading stopped, and when it started again, it was at $20, and I bought there, and now it's at like, I don't know, a lot, whatever that rate of return is, higher. So one of my best stocks in my not only personal portfolio, but also on StockBossUp as one of my rated stocks. The next one is Kroger. Just a solid niche into what they do. They're really focused. They've done a lot of good stuff. I think they have a lot of pressure on them, but they've really handled that pressure so far well. And I think that's going to continue at least into the immediate future. Amazon, I'm not going to say much about it. Amazon continues to grow. It is what it is. JP Morgan, I think, is one that people really sleep on. JP Morgan is just a beast. They are so consistent. They are objectively well managed. They are like clockwork. So I've hit them. I've bought into them when they've been undervalued multiple times. They just have a process of making more money through their core businesses and just shrewd investments. I will go through some of the value analysis about them because I think it's interesting at the end, but I think that they're one that people should check out more. The next one is Northrop Grumman. Really good, just defense stock. Just nothing much more to say there, just good. American Express, really good credit card. What's interesting about American Express is that the market gives American Express a premium. American Express for years will trade above its intrinsic value. And you might ask yourself, well, then maybe it's just because your intrinsic value is wrong. Well, funny enough, when COVID hit, the price of American Express collapsed right to its intrinsic value. Like we're talking right on it, and then bounced off of that. And multiple stocks this happened to. So that made me feel confident that it probably is its real intrinsic value, and that the market, because it's well known and kind of well seen by investors, it gets a premium. So when you invest with American Express, you really have to note that it's going to be trading above its intrinsic value until the economy itself has issues, and then it's going to fall right back to its intrinsic value. The next one after that is Walmart. I'm not going to say much about Walmart. Pretty steady. It is facing the threat of Amazon. Fine. It's doing it. It's fine right now. We'll let it be, but it's one that might go on the cutting board in the future. Tesla is an interesting stock. Tesla is the only one on this list that I don't do a value analysis for. I bought Tesla in 2013, sold it, thought I was really smart making a 60% gain. Turned out that wasn't as smart as I thought. Rebought again during COVID, and this is where it stands now. The thing about Tesla that I hope continues is that they really are aggressive in getting into new technologies. So they've really gotten into like batteries. You know, they're building a niche for themselves in the battery market itself. They're building a niche as how they do car production. They're making innovations there. I think niche is the wrong word. Innovation is what they're doing. They're innovating in batteries. They're innovating in how they make the car, regardless if it's electric or not. They're innovating on AI. That's a real thing that they're doing. Driven in quite a few Teslas now. It's very real. It's very real for the public, and so I think that's something that you really just have to keep with Tesla, because they're really doing a good job as of now with that innovation. The moment they stop, though, it's significantly overvalued, and it's gonna, you got to get out, and it's gonna be a bloodbath if that ever happens. But right now, I hope they keep that culture. It really is why Tesla deserves the valuation it has, regardless of the founder, independent of all that. Don't just disassociate the business with the founder. It's irrelevant to it. It's relevant to the market price, but for the long-term valuation, the innovation is what's going to matter. Everyone's going to forget about all this in a few years. They forgot about all the other stuff he did years ago. So just focus on the innovation. The next one's Google. Google is in a strange spot right now. They are really struggling to figure themselves out. Bottom line, search is their core, and search is changing. And that's confusing investors. And investors are very confused. And so the market in the short term is confused, which is going to be very volatile for Google. Once we get through this and a decision's made, if they're going to continue as a search, what search looks like, are they going to be a player in AI? Then Google will go back to probably being, a growth stock, a consistent growth stock. But right now there's confusion in the market, and that's well-deserved confusion. I have started using Bing, started using ChatGPT a lot more than I thought I would, and going away from Google. So if my own personal preferences is to go away from Google, there must be millions more that are trying things out. So there's instability in Google's dominance right now in the attention of people on their products. But by the way, they have a bunch of other products, so it should be good. They just got to figure it out. The next is Roper Technologies. This one I do a value analysis of and is in my portfolio. Roper Technologies is basically the niche software for a whole bunch of industries. So if you're in a specialized industry like, let's say healthcare, because they're in multiple healthcare software products, you're probably using a Roper product. If you're in other industries, there's a chance that the software you're using is niched for you, and it was done by Roper. That's their game plan. I like it. That's why they have that growth of that you see there. The next one is Borg Warner. That one really is a EV play. I think they did a good job diversifying into it, but still having a hold on the hybrid market. I like industrial stocks. They were undervalued. They gave the return that I expected. I'm holding it for now. Southern Company is my poster child of value investing. They are very consistent with how their stock goes up and down. The only thing was the nuclear power plant that they built caused a lot of confusion for a couple of years, and now that that's behind them, I'm pretty confident they're going to go back to growth. The South, where they're at, is growing, and they are doing a fine enough job, I guess, with their services. So they're going to have a hold on that growth for a while. Very small growth. I mean, we're talking utility stock growth. We're not talking about much. But strong dividend, just strong consistency now that the project is over. So it'll probably be my portfolio for a while. AEP was one that was undervalued. I'm skipping a little bit here, but because the utility stock I wanted to talk about also, that had the same valuation trajectory. The difference with AEP was they had some issues with leadership. Leadership was just kind of off, and I'm not going to go into the details of my gut feel about that. But listening in on their quarterly calls, there was something off there, and I think that they're finally getting back on track. The problem is it's a utility company. It's going to take a while to really see that. So they were going for a pure play utility where they were always going to be the sole utility in an area, and they were going to focus on that and grow that business. I'm going to check in and see where they're at. I hope they kept on that track. It was a good idea. They were growing the dividend. I always like utility stocks because I think they're really good for new investors. They add some stability if you choose the right one to your portfolio. Going up to AMD now. So AMD has been this, just the poster child for this new age of people into chip companies, like the comeback kid, the new kid on the new kid that's going to beat the old Intel. It's doing things. I think it's great. It's in my portfolio. It was undervalued when I got it. Good stuff. I think that there's a lot of competition right now, and maybe that's really good for AMD because they can really jump into new industries. They talk a lot about AI. They talk a lot about data centers. I think AMD can really jump into different things. But a lot of movement going on, in the chip industry. So honestly, I think everyone online that's talking about AMD is making just valid points, just really good points. Listen to them, check out our ratings on all these stocks. We only do the rating based on the top investors on StockBossUp. So you can see AMD is one of the top ones, and the analysis on it is quite sound. I've been really impressed with what people are thinking about the future of AMD. Microsoft is another one we're going to check out its valuation. I think it's very interesting. It's very interesting. I'll let the graph show you. Talk for it. Coca-Cola I hold because it's really good, but I might jump into Pepsi. Pepsi seems to be a better play in terms of diversification into snacks and beverages. They've gone into all sorts of different niches to diversify themselves. And yes, I'm talking more about Pepsi, even though I own Coke right now. But between Gatorade, Naked Juice, there's just so many different beverages that you might drink from a gas station that you don't even realize are coming from Pepsi. And it looks like they have a good strategy to keep buying out different snacks and beverages. And then we got Little Fuse as the last one down here at the bottom. I'm holding on to it. It was undervalued at the time. I think that I think that it has a good niche in what it does. It basically has a lot of different electronics and stuff around the household. It's an industrial. I think it has a good direction based on its value analysis, but it might be one that I might cut. So let's take a look at two different value analysis so that you can understand how I do all this. The first one is JP Morgan. So as you'll see in my value investing video, I break it up into 3 different categories to make it simple for an investor. I call it the past, present, or future. In this graph, it is the book value. It is per share. It is the 10 years of earnings potential, and it's the discounted growth. So, if I was the discount is really just a discount of bonds or a different, safer investment off of the growth that we are estimating that the company will have. So, JP Morgan has $1 trillion of cash. They have a lot of cash, and that's why their book value is so high. They have a lot of cash, they have a lot of assets, they're a bank, right? So as you can see here, the price of JP Morgan really follows the intrinsic value. And the beauty about JP Morgan is that there's some oddities, there's some moments of strangeness with their intrinsic value, but overall they are just going up. The intrinsic value just goes up, right? The discounted growth is growing. The 10 years earnings is by definition also growing, and all that is getting poured into their total assets. So that's just a healthy growth of a company that I can get it behind. They've proven it to me over and over again since 2009. I mean, you can see it. You can just see it. They're not going to be exponential, but they are so consistent that when there's a drop, when you see the price below the intrinsic value, you should start getting hungry. You should be like a vulture and ready to go. But then when it's way above, you can be confident enough that you're either going to sell or you're going to put a cover call on it. You're going to do something to hedge against that growth. Maybe for a new investor, all you have to do is stop dollar cost averaging until it goes below the intrinsic value. Simple as that. Lots of money to be made by doing something as simple as that. Ignore what I said about covered calls. So let's look at the other one. The other one is Microsoft, and Microsoft is the other side of this. So book value, they're a software company. What assets do they have? They have a bunch of buildings. They're not accumulating assets in the normal way that accounting would think about it. So their book value isn't really a big part of their price. What is a big part of their price is their absolute growth, just crazy growth. And this is what Microsoft does. This is what Microsoft is now. They're not an operating system company. Operating system company is a cash cow. All right, I said this in my previous video. I'll put it in the description. Microsoft is all about buying out good growth tech companies. They are a tech fund, and they do a really good job buying tech companies and having them grow more. And if necessary, integrating it into their gaming system, their operating platforms, their suite of Office software, or Bing. They're going to integrate it if necessary. If not, then they're going to have it as a standalone. LinkedIn is one of the examples. LinkedIn's more like they're integrating their stuff into LinkedIn. GitHub is another one. They're integrating into GitHub. And by the way, they own a good part of ChatGPT or the OpenAI. So, they're into a lot of technology. And so for them, it's not about the book value. It's about the growth. And they're proving it. So if you feel uncomfortable that you're buying just a software company, I can understand that. But they are really growing their earnings, right? And they're using those earnings for more buyouts, more investments in companies. So, check it out and note that when you look at my value video, that is why we talk about the past, present, and future. Past is the book value. The present is what you'll find out is the price to earnings ratio times 10. And then, the future is the growth. That is the hardest part to measure and really define. So that's my video. I hope you liked it. I hope you like and subscribe. I hope that you think you can beat me and join StockBossUp to showcase that. Joining StockBossUp and presenting your ideas is really important, because one of the problems about investing for new investors is trust. It's trust in what they are seeing, and also people that are giving them ideas being vetted. And that's ultimately what StockBossUp does. Behind all the fun and all the intensity that I'm doing, it's important to vet people online that are giving people these ideas. And what's frustrating is that there's so many of them that give great ideas. Ben Graham, who you saw at the beginning of the video, is just one great example of that. There's so many of them. Check out our Top Gurus page and go and check out their videos, because they're giving great ideas and we're vetting them. We're vetting them for you so that you can trust in the top 10 stocks on StockBossUp. And if you want to vet them, you can do one more click and see a video from them. That's what StockBossUp is all about. And if you share your ideas, then you'll add on to that knowledge, because you could also be a great investor, and you could also then have your stocks rated and shown to new and beginner investors and build more trust in investing. We really need to get more people investing. That is our mission. That's what we want to do. And we believe the real crux of the problem is trust. So we're going to do bloodthirsty competition to get that trust out of you. So please check us out. I really appreciate you watching the video. Take care. I hope your portfolio gets wealthier today.